Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. So, we're continuing our discussion regarding QuickBooks. So, the number two mistake we make regarding QuickBooks is the chart of accounts. So, you may be asking yourself, what is the chart of accounts? Quickly, I call the chart of accounts the foundation to good financial statements. It's basically the list of categories to classify each transaction. So, each transaction in QuickBooks has to go into an account. So I use sometimes I may say the bucket. So each account needs to go, each transaction, I should say, needs to go into a bucket. And why is the chart of accounts important? Because those transactions all need to flow into an account, which an account flows to the financial statements. So the sole purpose of the chart of accounts is just for reporting. You need a chart of accounts so you can have financial statements. Because if we didn't have a chart of accounts, then we would just have a list of transactions, and that would not make life easy. So, the mistake that we make regarding the chart of accounts in QuickBooks is that many people, many users believe they can set up the chart of accounts themselves. That is incorrect. If I would say if you didn't go major in accounting, you may make a mistake. So the number one mistake that's made is not understanding there's different types of accounts. So in QuickBooks, you need to tell QuickBooks is in an asset account, liability, equity, expense, or revenue. So you have to understand the definition. So quickly, assets, basically what the organization owns. So that's bank accounts, inventory, fixed assets. So that's vehicles, equipment, accounts receivable. Liabilities is what the business owes. So that's loans, that's line of credit, that's credit card, that's accounts payable. Then you have the equity section. The equity is where you have owner investment and owner withdrawal. Then you have expenses. I think that's pretty self explanatory, supplies, payroll, and rent. Then you have revenue, or you may call that income accounts. So, rebate account, grant. Some people may have like service account, product income. So, you really want to make sure you understand what account you're creating or what account you actually need. So, let me give you a quick demo actually in QuickBooks. So this is a sample company and this is the chart of accounts for this sample company. So in QuickBooks, you have the name of the account, you have the type. So this is very important. So this is what I was talking about. You need to make sure you understand these terms. What's current asset? What's fixed asset? What's let's go down here. What's liabilities? What is equity? What's income? And then also too, QuickBooks has the detail type. So what happens is you may ask yourself, well, what's the difference between type and detail type? I say this, I use this example. So type is the parent and the detail type is almost like the subcategory or sub parent. Then you have the balance, the bank balance, and then you can download the reports. So let me go over here to QuickBooks and actually just create a new account. So account type, once again, this is very important. You have to understand the terminology. So what type of account are you creating? Are you creating an asset account? Are you creating a liability account, a long-term liability account? So cost of goods sold or an expense. So you want to make sure that your chart of accounts is set up correctly. If it's not, the accounts are going to point to the wrong financial statements. I'll give you a example. I worked with a client and they had utilities listed on their balance sheet. So we all know utilities is an expense. That is not correct to have utilities on the balance sheet. They actually had the type for utilities coded, not coded, but categorized as a asset. So this is what I'm talking about. So depending on this type, QuickBooks is going to point to the different financial statements. If this type is not correct, it's going to point to the wrong financial statements, and your financial statements may be either overstated or understated. So hopefully you find this information helpful. Your homework for today, or I should say this week, go check out your chart of accounts to do a quick audit. If there's accounts that need to be inactive because you're no longer using them, make them inactive. Just do a quick review. It's always helpful to do a review of your charter of accounts on an annual basis. I'll see you next time.